Hey, what's going on, guys? Leo here. So we have a really big week for Ethereum and really the entire crypto space because of three landmark bills that are about to get passed through Congress and then signed by the president. So let's go ahead and take a look here. So the first one, the really big one that is going to affect Ethereum a lot is going to be the Genius Act. This is the stablecoin bill. This is essentially going to give financial institutions the regulatory clarity that they need to feel comfortable launching massive amounts of stablecoins. There are stablecoins that have been launched. So we have about 140 billion worth of stablecoins on Ethereum right now, but analysts are predicting that we're going to see trillions of stablecoins, and I can actually back that up with some comments from the government. But this is a really big bill. This is going to unlock the floodgates. Actually, all of these are really big bills. So the next one's going to be the Clarity Act. This is going to give market clarity. You know, for years now, we've been fighting, like, for example, with Gary Gensler, we haven't had market clarity, market structure to be able to tell us, you know, these are the rules of the road. Now we're going to have that finally, and that is going to allow these financial institutions to really start to adopt, build their decentralized finance platforms, build out whatever it is that they're planning to do in their new business models. And then we have the Anti-CBDC Act. Now, there's a lot of concern that people had that, you know, the government would launch essentially a central bank digital currency, which is basically a government stablecoin. And the concern there was that they'd be able to watch what you're buying, monitor all your activities. If they decide that, oh, you're buying too much gasoline this week, you're spending too much gas, they would essentially make it so that you can't buy any more gas. And so that was a big concern, not specifically like Ethereum gas, but you know, driving gas, but not specifically that it wasn't specific to gasoline either. It's just, I'm just using that as a broad example, what people were concerned with. So the Anti-CBDC Act essentially says you can't do that. There's not going to be a central bank's digital currency. We're going to do this where you have companies like Fidelity, BlackRock, Robinhood, JPMorgan Chase. They're going to launch their own private stablecoins. It's going to be backed by U.S. Treasuries. Now, the president had tweeted out that he wants to get the first vote through today. Now, whether that's going to happen or not, I don't know. I looked at the schedule, and it looks to me like we're going to get the first votes tomorrow, and then that would be for the Clarity and the Anti-CBDC rules. And then on Thursday morning, we would look to get the Genius Act passed and then sent over to the president to have signed and finalized. Now, going into the Genius Act here, we look at the flows on Ethereum ETFs. You know, the last few days, today has obviously not come in yet because trading hasn't ended, but, you know, we're talking 211 million, we're talking 383 million, 204 million, 259 million of ETF inflows each day. And I believe they are front-running the stablecoins being approved, because as soon as you start seeing hundreds, because right now we really don't have very many stablecoins. We have something like 140 billion. That could very easily double very, very quickly. I'm talking one company like JPMorgan, and you have 140 billion on its first day of launch, if not more than that. So, you know, you could have quite a bit of stablecoins flooding into Ethereum very, very quickly. Now, you might be thinking, well, Leo, how is that possible? You know, they got to build their infrastructure and everything. Well, I believe they already have. I believe that they've done this behind the scenes. They have products ready in preparation of these bills being passed. I mean, even if you assume that when this was first announced that the president wanted to do this back in January, that means they've had, you know, half a year to build out the infrastructure that they need. And these are, you know, multi-billion-dollar companies. They can do that very, very quickly. They can hire the best talent that they need and get these products launched out. So I believe that we're going to see an acceleration and adoption here. But let's go ahead and listen to David Sacks, the crypto czar. This is a really interesting piece here.
Stablecoins really have the potential to ensure American dollar dominance internationally, to increase the usage of the U.S. dollar digitally as the world's reserve currency, and in the process create potentially trillions of dollars of demand for U.S. treasuries, which could lower long-term interest rates.
Now, the interesting thing there was that he said lower long-term interest rates, and this has to do with treasuries and stablecoins, right? Well, Genius Act is about to be passed, and the president is calling for the Fed to cut rates by 3 points, hoping to save $1 trillion a year and talking about interest payments and funding the debt. So now we know that the president has been pushing for crypto legislation. We're pushing for the Stablecoin Act to get pushed through. And we just heard David Sacks say that they're looking to bring down interest rates. The president's been putting pressure on the Fed to bring down interest rates. Who else could he start putting pressure on to bring down interest rates other than Fed Chair Jerome Powell? Well, if he creates enough demand for stablecoins by meeting with these banks, these financial institutions, and starts pushing out hundreds of billions, if not trillions, in stablecoin demand very quickly, we could see long-term interest rates start to come down. So I'm speculating here, but I bet that if they haven't already started to do this, going into as soon as this bill is signed and into law, they're going to be in full force pushing for big companies to start adopting stablecoins. Now, what does that mean if we suddenly have trillions of stablecoins on Ethereum? Well, if we take a look here, there's a really interesting metric that you can find on Token Terminal, and you take the fully diluted market cap, so the total market cap here of Ethereum, and which is currently 363 billion, and you look at the ecosystem total value locked, which is going to be the blue line. You'll notice that the market cap of Ethereum, the fully diluted market cap, is always above the fully diluted, the ecosystem total value locked. So as we see trillions of stablecoins being minted onto Ethereum, that would imply if this trend is going to continue to hold, and I believe that it will, we are going to see a multi-trillion-dollar market cap for Ethereum very, very quickly. And this doesn't even count, we're not even talking about the tokenized real-world assets on Ethereum. We know that Robinhood, for example, just launched their own Robinhood Layer 2, and actually, I take that back. I don't know if they've fully launched it yet. I know they announced it. I'll say that. I have to check whether it's been actually launched, but they've announced that they're going to be doing their own Robinhood Layer 2. And what's interesting about that is that if we come over here, they actually just had a tweet, and it says, "Remember when we eliminated commission fees on trading?" So what they're talking about here is they're talking about payment for order flow. So basically a few years ago with all these retail trading platforms, they moved from charging you a trading fee to, hey, it's free trading, guys, no commissions. But the way they actually still make their money is they do it by payment for order flow. So that, it has to do with selling order flow of transactions. And then those transactions are essentially reorganized in a way that Robinhood or whoever can make a profit. So it's very similar to the way that you have maximum extractable value on a blockchain, MEV, the way that those transactions can be reordered to get more profit. And we know whenever Robinhood did this announcement, they specifically said, we do not want to launch on a Solana blockchain because of MEV concerns. Now, what does that tell me? That tells me that Robinhood is purposely avoiding Solana because of MEV, but the reason they're doing that is because it would take profit away from their business model. And what this tweet implies to me is that they're going to keep the eliminated trading fee commissions, right, for their new Ethereum Layer 2 that they're building. And they wouldn't be able to do that if they built out on a blockchain like Solana, where Solana can essentially extract away value from their business model. This is what I talked about a long time, that the Layer 2 model is checkmate. We won, period. Because these companies need custom infrastructure. They need custom solutions that they can build out whatever vision they have for their business out on their own Layer 2. And people say, oh, well, Layer 2s aren't Ethereum. That's ridiculous. They are Ethereum. It's like saying the crust of the earth or the mantle or the core of the earth isn't the earth. Yeah, it's part of the earth. It's part of a much larger ecosystem. And that doesn't even go into the network effects. For example, Robinhood can get clients from Ethereum if you're on this huge network that has, so for example, like let's say that JPMorgan Chase, right? They bring in clients, right? They have their bank accounts, their checking accounts, they run their stable coins, and then they can very easily, it's just like the internet. If you have people going to the internet to do a Google search, it's more likely that they're going to venture off onto YouTube and watch a YouTube video. It's more likely that maybe they see something on that YouTube video that maybe they're looking at travel videos and they want to go out and buy a travel toiletry bag. Okay, so then they go Google and they just go to Amazon. They pop over to Amazon and they buy something. And so you get a lot more traffic having it all on one network even though you can have competitors on that same network, the mere fact that the traffic is there, you still get more money, you get more revenue, you get more traffic. Same thing, take a look at Amazon. You have all kinds of competitive sellers on Amazon, but they all want to be there in this very competitive environment because all the traffic is there. And that's what you get with Ethereum. So anyway, I think that Robinhood, I think that they're going to start tokenizing a lot of assets. I believe they have something like 250 billion worth of assets under management. So a lot of assets there to start being tokenized. So just in the U.S. Department of Justice ends investigation into crypto prediction platform Polymarket. So that's good news for them. Let's go ahead and listen here. This is Circle CEO talking about stablecoins. Let's hear what he has to say.
As the leading regulated stablecoin network in the world, we're I think in a really, we're in a great place to build on that. And this is a moment where it's been a long time since you've actually had an upgrade to the financial system, to the very nature of what electronic money is, and digital currency really represents that. And we're, as I like to say, still in the very early days of this. And so, we think about, just like Treasury Secretary Besson talks about trillions of dollars of stablecoins in the coming years, major investment banks and others, looking at trillions of dollars of stablecoins. We can imagine a world where, stablecoin money is the primary way that transactions happen on the internet. And that's what we're going after.
I think that is the message from your stock performance, right?
I want to pause there. So he says that, stablecoins could be the primary way that money is transferred on the internet, but it's more than you just being on your computer or on your phone. If you think about it, if you go out and you go to Panda Express for lunch and you go over there and you click for payment on that terminal, that payment goes through the internet. So essentially what he's saying is all transactions other than cash transactions, like physical cash, will very likely be stablecoins. That means that we're looking at a situation where the entire world's GDP, I believe it's $107 trillion worth of GDP, will be stablecoins and transacted on essentially Ethereum. So, that's the total addressable market is $107 trillion worth of global GDP being transacted, secured, and settled by the Ethereum network.
That something transformational is happening. But can you just explain what the major use cases are for your stablecoin, USDC?
Yeah, so we operate a stablecoin network, and it's important to understand there's the actual digital money, like the USDC asset or the Euro stablecoin asset, but it's a network. And that network consists of thousands of products and services that have integrated to our network that provide utility. Those are wallets available to users, households, businesses in almost every country in the world. Those are financial services products that are built on blockchains that allow people to invest, to save, to lend, to borrow, and then an enormous amount of growth that we've been seeing in international transactions. I like to say, when's the last time you sent a cross-border email? It doesn't really register. What are you even talking about? And we've talked about cross-border payments and the challenges. I think stablecoin money is for the first time creating a way for people to transact the same way that they message with WhatsApp, the same way that they use the internet for everything else, directly with people, instantly at virtually no cost. And so we're seeing these kinds of international transactions for businesses, for households, and then even within countries where people are finding they want to store their money in digital dollars. Yeah.
So really interesting discussion, and I completely agree. This is just the start. The big thing that has held back crypto adoption and Ethereum adoption is the lack of regulation, because all these large financial institutions, they might have been experimenting with it behind the scenes, but they don't want to dedicate serious capital and start building on something without clear regulation. There are few financial institutions that are willing to take that risk, such as Coinbase, Gemini, Kraken, these companies that have been around specifically in the crypto niche. But big financial institutions don't really want to go full steam ahead until they have that regulation. But once they do, you're going to see massive products being launched, and suddenly you're going to see, there's 50 million new people on the network. There's 100 million new people on the network, because whenever a company launches a new product on Ethereum, you essentially, it's almost like it's not really a vampire attack because you're not really stealing customers from like JPMorgan Chase, for example, but it kind of is in a way that whenever JPMorgan launches a product on Ethereum, they bring their brand, they bring their trust, and all of that comes onto the Ethereum network. So just taking a look here at the price, again, same pattern. We're in this massive bull flag of consolidation, and coming in here, zooming in closer, you can see, again, I'm amazed how close this pattern is tracking to the prior cycle. So if you haven't been paying attention or you're just new to the channel here, well, essentially what I did was I cloned the last bull run and I put it at our bottom here, and I've been tracking it ever since, and so far it is just remarkable how close this fractal pattern has been following. And so essentially what we did was we broke down below the 200 weekly EMA briefly, we reversed, we came back up, we tested it, now we bounced above, and now we're above the 200 weekly EMA, we're above the 55 EMA, we're pushing higher here. I wouldn't be surprised if once these stablecoin bills and everything, they come out and they're official, that we do get a little bit of a pullback or maybe just move sideways here, consolidate while these companies start launching their products, and then we actually start to see the stablecoin volumes start to move up on the chain, or we start seeing tokenized real world assets starting to increase, which would bring us, we could just keep going up from here. Don't get me wrong. I'm just saying that I wouldn't be surprised if we saw a consolidation period once the bills are officially passed. Well, I think that pretty much wraps up today's episode. You have any questions, drop in the comment section down below, and I'll see you on the next one.